filing for tax?
Okay, absolutely. First, everyone, thank you so much for allowing me to come and talk to you all about taxes as well too. I know this is sometimes can be fun, and it's a lot of things that's happening in the tax world. So hopefully, I can be able to answer your questions or at least guide you in the right place as well too. So just kind of to start off, we talked about what's the best format. And I think this is definitely a better format just so you all could be able to ask questions. Feel free to jump in, ask me, if there's some thoughts and things you have. If you don't, if it's something that I don't know, I'll be happy to write it down and follow up as well too. So, because there's so many tax laws. But the first thing is, well, you asked about, being an independent and a dependent when filing taxes. And a lot of times that just really depends on a lot of factors. Is one is like whether your age, whether your parents file you as a dependent on their returns, or whether you're filing your own on your own and stuff, and also the amount of money that you're making. A lot of times, from birth, when you're born, your parents file you as a dependent. And what that simply means is that your parents is providing, your parents or someone or a caregiver is providing 50% or more support to you. So that's exactly what that means, as being a dependent of someone. It means you're not relying on yourself. There are some rules and tests that goes along with that to determine whether you're a dependent and whose dependent you are. But it could also be an aunt, it could be a brother, it could be a sister. But the premise is still is that they are providing 50% or more of your support, and that's a dependent. An independent person as well too is that you're over the age limit, you're making enough to support yourself. So you're providing 50% or more of your own support as well too. So you're probably at this moment have your house, your own household as well too. You're paying for your bills. Some of the things are age tests, and so a lot of things with tax is not maybe one or the other. Sometimes it's a combination depending on the story. As well too. A couple years ago, a law was put into place that a student could be a dependent up to the age of 24 years old as well too. So if you were a student in school, you would still be a dependent because it used to be age like 19. But if you're in school, 9 times out of 10, they found that parents are still providing, 50% of support. They think by 24, you probably would have graduated college and been out on your own, and then you start to come off of your parents. Taxes. So that's the difference between independent and dependent. The very first question I was asked is just to start with is the litany test of who's providing 50% or more of the support.
Okay, thank you. That makes a lot of sense.
Mm-hmm.
Is there an advantage or disadvantage of filing as an independent or dependent?
There's advantages and disadvantages to both as well too, and this is where if your parents are claiming you as well too, and you are a dependent, they do some tax planning strategies as well too. It's always good to have a dependent because you are actually, whether you are independent claiming yourself as taking care of it or your parents is claiming you as well too, it's just always a benefit to the person who's providing 50% or more of the support as well too, because I don't want to use refunding them back, but it's actually giving them support or credit for actually the support that they provide for you throughout the year as well too. So it really just depends. But if you are a student and you're in school and you're in college, it's going to probably be best that you are probably with your parents because they are meeting those requirements and stuff. So as long as you are meeting the requirements, and 50% support or more is just one requirement of many as well too. But it just depends on your situation. And also it's always best, and you'll probably hear me a lot through this is to say kind of do some tax planning.
Okay, thank you. Our next question is, should teenagers with a job file a tax return, like if they're getting some kind of income?
Yes. So a lot of times teenagers can file a tax return if their job is taking out federal and state taxes. So absolutely, if their job is taking out federal and state taxes and they should file a tax return to actually, and they're being claimed by someone else, they're not responsible for the federal and taxes. So yes, also if you are working as well too, you might want to pay attention to the laws as they change every year about how much you make as well too. If you actually go over a certain amount or go over a certain limit, you are required to file a tax return. So, and this is where I go back to kind of tax planning. Um, kind of tax planning. My daughter is 18 years old as well too, and she's on her way to college. And I'm looking at her, and I know she works. She works full time, and she also supports. She also works in my company and my organization as well too. So I'm looking at, how much she's making from the company. I'm looking at how much she's making from me, and just making sure that she doesn't meet the threshold that would really trigger her having to file a tax return and pay taxes and stuff. So this is a very proactive thing. Taxes happen every year, April 15th, but I would always just be mindful to just be mindful that you want to be very cognizant of what you're doing as well too, and especially if you are a dependent of your parents, having that conversation with them. I'm saying, hey, I'm making this amount of money. I want to make sure that we're all aligned.
Oh, sorry, I'm not sure what happened there. My connection went out, I think. Can you
Okay.
guys still hear everything?
Yep, I can still hear you on everyone.
Okay. Did you finish your answer to the question? It just froze out for me.
Oh,
Okay.
yes, I did. Okay.
All right, I can go over the next question then. The next question was, do teenagers who are working have to pay FICA taxes? So I think that's something that we talked about earlier, kind of what you were saying about the taxes that we take out of, or that the employer will take out of a teenager's paycheck in comparison. So that was the question.
Yes, well, two things. If employers will take out federal and state taxes, so that one, but everyone has to pay FICA taxes. So that's FICA is Social Security and Medicare. That is a requirement. Essentially, when you're working, they're saying you're paying into this fund of Social Security, and you're paying into this fund for Medicare, which is kind of your health insurance piece. So when you get at a certain age limit, as well too, this fund would be available. Social Security and Medicare, you're working to put money into it every year from the time you start working, and then when you go to retire, you would actually get the funds as well too. Like they would actually cut you a check for Social Security and Medicare. So FICA tax, which is considered Social Security and Medicare, everyone has to pay. Federal and state, you don't. You can actually be exempt from it. And if you're actually looking at tax forms when you go fill out a job, actually look at the tax forms and read what they're asking you, and make sure that you're choosing the right selections to know whether you're exempt from federal and state. To make sure that you're actually following the right, you're doing the right thing as well too. So, yes.
Okay, thank you. Our next question is, what's the difference between earned and unearned income?
Okay, great question as well too. So, earned income is anything that you have from a job where you're generating a W-2, or you're contracting work and they're paying you for it. So there's a service that you provide and someone is paying you. So that's earned income. As well too, there's some type of work involved, service involved. You do this and you're compensated for it. Unearned income is things that just happen. For instance, interest. Interest is always the main one as well too. Sometimes teenagers have savings accounts, or their parents have these set up like bonds and things, and they grow interest in the actual in their kids' names and things. So with that, that's unearned income. There was no service or something that you needed to do in order to be compensated for. It's just merely investment of your money, and your money is growing and stuff. So those are the difference. When you talk about taxes, when you really talk about taxes, you think more of earned income. When that's usually more taxes. You can have a tax return for unearned income, but the ideal thing is that you'll probably have an income tax return for earned income. It's forever you working for, they're probably issuing you a W-2 or some type of form to say like, hey, you've worked here for this amount of time and this is how much you've made for the year.
Okay, thank you. One other thing that I think we talked about a lot this morning was adjustments, deductions, and exemptions. So you think you could talk a little bit more on how maybe somebody our age who's filing for taxes would be able to reduce them using those strategies?
Correct, is correct. So looking at the Form 1040 as well too, and it's has changed and developed over the years, and I think there's even some laws out for it to develop more. There are these things that actually there's these buckets where they actually you have your earned income that you've actually worked, and then there are things that help to reduce to get you down to a taxable income. So think about it in two terms. Is one is the income that you've earned, which we've talked about. That's all of the things that you've worked, you've gotten money from. So that's your gross bucket. That's the gross bucket. And then for tax purposes, they start to reduce that amount little by little for certain things that might happen as well too. Like for instance, you could have for a credit for school or something like that for education. You can actually get a tax credit. So as opposed to and it's kind of an incentive for you to go back to school because then you end up paying less taxes. So those are some things. There could be deductions for student loan interest. That's another thing that reduces. And without getting into technical, each one of them means different things, and each one of them ends up on a tax return. But the goal is still the same: is that you start with a gross amount, and that's what you've worked. That's what everyone has given you. You start with a gross amount, and then you want to try to get to a taxable amount. And that's what those adjustments, deductions, and exemptions sits in the middle to reduce the gross income to get you a taxable amount. And then that's what the IRS says. Okay, this is your taxable. I know you made this, but you had all of these things in between. This is what this is what you should be taxed on as well too. So, and I get questions usually about can I deduct the car or things like that. So no cars or anything like that as well too. They're very clear and have very guidance on certain things that can be deducted. And then some things are just incentives, like they really want to incentivize people to go to college, so they will do deductions for school education, for books as well too, for student loan interest. So the things that they try to find that's important for having kids. Kids is also a deduction. Daycare donations, donations and charitable contributions. I'm not sure how much it went into, but all of those things can help reduce your income as well too, to come to a lower taxable income. And is there any questions on that as well too? I know I'm talking. Please feel free to jump in. Is there any questions on the difference between like gross income and taxable income? Okay. If not, no worries as well too. So okay.
Yeah, I think that's something we talked about this morning a lot. Like AGI, your adjusted gross income, was something we watched in the videos. I think that's what you were referencing when you were saying like how we can deduct from our actual gross income, like the earned income, and make it a lot smaller.
Yes, absolutely. Absolutely. And those are the points, is the adjusted gross income. And then you come down and I'm sure they probably talk about credits, where you get credits, which are dollar for dollars as well too. Some things adjust, and some things is what we call like dollar for dollar credits as well too. Like education credits is dollar for dollar. So it literally, if they say you get 3,000 off, you get 3,000 off as well too. It's a whatever they say the tax credit is, that's what it is. Some other things just kind of reduce the amount and by a percentage or something like that. So, yep, that's very important to it's very important to understand the difference between those.
Okay, great. I think I see a question in the chat. It says, how is it that the upper class finds so many ways to pay lower taxes? What are the tricks in the system that allow this to occur?
Right. So actually, that kind of goes into a question you had asked me as well too. They find a lot of tax planning as well too. Tax planning and knowing the tax code as well too. A lot of times people don't know the tax code. It's so many. It's a large book. It's very large, and it's always changing. It's and there even now, like I said, we have something out there that's changing. So when you are actually considering doing your taxes, going to a reputable person who actually understands the tax law would always be the best thing. So what happens is with the IRS, if you don't take advantage of the tax code, they're not going to email you back or call you back and say, hey, you didn't take this deduction. They're going to assume they're just going to keep going with it as well too. They actually put the onus on you, the taxpayer, to make sure that you are staying on top of it, or that you have hired someone that can actually perform, that you've actually hired someone that can actually perform preparing a tax return and know the tax codes to be able um, to help you. But I will say another thing is that they do a lot of tax planning as well too. And I think I kind of mentioned to you about, kind of tax planning with my daughter. They actually are looking at this a couple times throughout the year. They do not wait to April 15th to make this decision. They are actually looking and actually proactively looking, because sometimes some of these decisions have to be made by December 31st. So by December 31st, they've actually already kind of know what the end of the year is going to look like. They're looking at all of these deductions. They're looking at charitable contributions. And I'm not sure if you've always heard as well too, like the tax laws has changed a little bit, but in any nonprofit, donations are the highest in December. And the reason is because people start to donate for tax reasons. That's a tax strategy as well too. So they're looking at their taxes. December is the time to donate because you actually get a tax advantage for it as well too. So to answer your question, is really knowing those laws, or finding an accountant who actually can help you prepare taxes, who knows those laws. So yeah.
Okay, thank you. That was really interesting. That's a good question because I was wondering about that too. I don't see any more. Madison, do you have any questions, or do you see any in the chat that we might have?
Yeah, I see one in the chat, and it's kind of going back to this issue of being a dependent. So they said, when filing as a dependent, do you submit your own tax return, or would the person claiming you just submit your tax return for you? Essentially, is it something that you'd have to do on your own, or do you just give your documents to whoever's claiming you and they take care of it in their taxes? How would that work?
Okay, good question as well too. So when someone is there claiming you, when someone is claiming you, you give them your documents because you are going to end up on their tax return as well too. So you don't file your own return. You give them all of your W-2s that you have, any tax documents that was given to you, and then it combines with their return. Absolutely. And then, so the good thing too is, like, if it is your, like I said, if it is a parent or aunt or uncle and stuff, this is also another tax planning thing, just to be letting them know, like, hey, I'm getting ready to make about this amount of money. What's the trigger that I should start, having those conversations? I'm getting ready to make this amount of money. Should I start paying into taxes? Because it impacts them as well too. Like I said, it impacts them as well too, just having those conversations to make sure that you're balanced and stuff. So that's that proactive as opposed to being reactive.
Yeah, I see another question in the chat. It says, how did you get into accounting, and what sort of inspired you to pursue the field?
Okay. Great. One of the things, if you wanted to get into accounting as well too, would be to just start really taking classes in college. My high school actually had an accounting class, and I started taking it. I started taking accounting there, and I just kind of fell in love with it when I was in high school. And they just had a breakout business class that specialized in accounting, and I started taking it, and I fell in love with it. I like the things to balance. I like the things to make sense. And then I just went through to college, and I did it in college. And then when I came to get my master's, I figured it would be good to have an MBA, which really focuses on the business aspect as well too, because we work with we work a lot with small businesses. But I would definitely start to say get into, kind of start to get into it in college. Take those basic classes. Write down accounting. Really have an accounting and with some IT technology uh, background as well too is a really great field because a lot of what we do now is very electronic as well too. So you're learning how to use the system, and most schools are already there as well too with manual. Moving away from manual and doing it from an electronic standpoint, but it is a very interesting field as well too. I enjoy it. I wouldn't change it for the world, but that's what inspired me. And I also had a really great teachers and mentors as well too that kind of told me about accounting, and they've actually opened up doors for me. So if this is something that you are interested in as well too, start to make the connections now and then let people know that you're interested. Where you can intern as well too, and know that the one thing I would say too is know that accounting is a very large field. I know this session is about tax basis and it's important for it. It's definitely important, but it's a very large field. So when someone says accountant, the first thing they normally think is tax work, but there's so many other aspects of being an accountant, being a CPA, being an enrolled agent. All of those have different meanings. So actually kind of study the different paths. If it's something someone is interested in, I would encourage them to look at the different paths. If they could internship somewhere, take the classes as well too. Talk to your advisors who are accountants, and they can guide you in the right direction because different things work for different people. I have a lot of friends that are accountants, and we're all in different aspects of accounting as well too. But usually, the first thing someone think of is tax work, but there is so much more in accounting.
Okay, thank you. I have another one that kind of goes along with that a little. It says, what was the deciding factor for you to become an independent business owner?
Oh, that's a really great question as well too. So my deciding factor was I was actually working for. I had went to college. I went to Bowie State University as well too, and I came out and I went to go work for a public accounting firm. I was doing auditing there, which is another part of accounting. So just kind of another field. And then I was doing auditing, and I decided to go private, which means I started working for a private company, and I actually just started doing general ledger work and preparing taxes for the company. And I was working at these very large companies. I've had a really great career, really great or companies that I've worked with. But one of the things that inspired me to go out on my own is that any books you read is that entrepreneurs go out of business in the first couple years for accounting. That's the number one reason that businesses fail is over money and over accounting, and they look at their business as just being a tax, as just preparing taxes. So I decided to open up the company and bring that experience from a corporate America and bring it to small business and individuals to help them grow their business, to help them with tax planning, to help them get those deductions that maybe most people don't really know about. So that was my driving force to just what's being happening in corporate America could really be happening at smaller businesses and with individuals to help them grow. To really help them grow. A lot of times people think that they can't afford it, but the taxes, it's you say you can't afford it, but it's really how can you not afford it? The IRS makes a lot of money just off of penalties and fines as well too. And I like to call it the gift that keeps on giving because it keeps going and it keeps going. I work with tax attorneys. I also partner with tax attorneys who actually litigate and talk with people who haven't filed taxes in a very long time as well too, and it's just something that just kind of gets out of hand because they don't know and they don't have the right people and they don't have the right resources around. So just if it's something you want to get into, just I would just encourage to be a great resource to people. Just be able to be a great resource to people or guide them, even if you can't help them, guide them in the right direction.
Yeah, I love that. That's really great that you guys are focusing on like smaller businesses in comparison to those who might not know a lot about it because even taxes are very complicated, obviously, and a lot of people probably don't know about it. Um, I don't know if anyone has any questions. Do you want to talk a little bit more on auditing? I'm not sure if everybody here knows what that term is. I know you had said that you did that in the past.
Okay. Yeah. So what auditing does is auditing is a little different than taxes. So like I said, so many aspects of accounting. So one is tax. You have tax preparers, which could be a tax preparer or they call them enrolled agents. As well too, we all have e-file numbers, so the actual government knows that we're filing taxes. They tie the tax returns to us as well too. There's even some talk around us actually doing some CPE credits as well too, because there've been a lot of fraud with tax preparers. So make sure if you are going to a tax preparer, find a reputable one as well too. So that's tax work as well too. Auditing is from a different standpoint. You actually come in and you actually look at the and review the work of a company's books as well too, their financial statements. So you're making sure that what they're saying is correct, that they're reporting their numbers correctly. I'm sure you all heard of companies, overstating their numbers for, fraud and stuff. And that means that their numbers, they might say that they're making more revenue than what they are as well too. So you're coming in to just validate the validity of the numbers because people are relying on those numbers. If you have a small business and they're going to the bank for funding, they're going to take their financials there, and the bank is making decisions off of these financials. The bank is saying, okay, we're going to give you money off of this. We're going to loan you money off of these financials. We're going to, help you with anything, or, just anything banking wise based off of what you're saying you're making. So if those numbers are incorrect, then that actually puts the bank in a not so good situation. One good case study, and I'm sure if you all know about or is something you're interested in, is Enron. It was a couple years ago as well too, where the company went down, and the accounting firm that was supposed to be doing their accounting and saying and actually signing off on the numbers didn't do a good job at all as well too, and people are invested in this, and people lost pensions, people lost money, individuals, people who work for the company. So this job is taken very light, just very seriously as well too. It has an impact on people's lives as well too. So Enron is a really great story about how accounting wasn't done right outside of Enron doing what they did, but the oversight of it didn't work as well too. They didn't do what they were supposed to do, and the economy relies on it actually being correct. So when you're in auditing, you actually go in and say, "Hey, this is right. This makes sense. What they're doing is correct or not correct." So please feel free to ask questions and jump in if I've left off anything on the auditing. And that's just one aspect. I have kind of talk. I have friends who work for they do auditing or accounting for SEC, and that's the Security and Exchange Commission. That is a completely different ball of wax with different rules, different regulations as well too. And those are companies like the larger companies that you would know, like Amazon, and those things are heavily regulated as well too. Again, think about how many people Amazon employs, and if something was to happen to them financially, and there wasn't oversight, think about it's a trickle down effect. A lot of people would be laid off. Our economy would crash. So the accounting and the money piece is always the thing. If there's this saying, it's like if you want to catch someone, just follow the money. Just follow the money. But there's many different aspects. So if it is someone that's interested, uh, I would definitely say just think about what area you want to go into. And if you are in college and you are taking classes, there's several classes that you would take that's encompassing in a degree that you would actually determine. You would kind of get an idea of which one you like. And then wherever you can intern as well too, I would definitely say intern.
Right. Yeah. So I have one more question from the chat, and I know it's probably weird that you're just getting them from Madison and I, but it's just because for privacy, well, we're recording the guest speaker portion, so for privacy reasons, if people don't want like their voice or their face in it, that's why you're only hearing from us.
Okay.
Yeah, because I know you were probably expecting participants to ask, but we just, because of the recording.
Okay. No worries.
But these questions are from them. They're just in the chat. So I have another question, and it says, have you ever had a client that faked their numbers?
Yes. Yes, I have. Yes, I have. I had a client that faked the numbers as well too. I've had a client who actually hired an employee who was stealing money as well too. I have, and they all do it for different reasons as well too. There's no good reason, but I actually did, have those situations where I knew that the client wasn't doing correct. They wasn't doing correct accounting and stuff. And this is where the ethical part, we are all required to take ethical classes as well too. We have an ethical responsibility. We have an ethical responsibility to be able to let them know, depending on where they're at and the type of contract you have with them. You might have an ethical responsibility to report to the board. So sometimes some things are different depending on the organization, but absolutely, I have as well too. And this is where you have to maintain your ethical, stick by your ethics and stuff as well too. So like it was either we're going to make this change or obviously we can't partner with you in this as well too. It's not the engagement. It's not the engagement for us as well too. And like I said, with that case with Enron, that's what happened. The accounting firm did not do due diligence and actually respect their ethical responsibility, and they went down as well too. They kind of went along with the fraudulent numbers. There was a lot of breakdown in systems and roles and communications and processes with that as well too. But you, as accountants, you do have an ethical responsibility to be able to notify whether it's a board or whoever you're reporting to, or the bank, or let them know, or pull yourself back from the engagement. You could always leave. You don't have to continue. You definitely don't have to continue. I find a lot of times I've had businesses where employees have stolen money as well too, and this is not having good processes and controls in place, and it was really sad. I really felt sorry. I really felt sorry for him because it was a matter of him pretty much on the brink of losing his business as well too. So, and that's not all of the cases as well too. But when you are the owner of a company, you have a responsibility to make sure you have a responsibility of the finances to make sure that it is being done correctly. You have a responsibility of putting the right team around you as someone as an oversight to make sure that the money is being handled correctly.
I think that's all of our questions for the chat. I guess the last one we have is if there's any other information that you think teenagers learning about taxes or anybody our age trying to find out more about finances, if there's any other information that you think we should know.
Yes, as well too. I would just say make sure as you're thinking about doing taxes, which means you might be thinking about getting a job. It's never too early to really learn about taxes as well too, and know enough to know kind of like the basic classes. But find a trusted advisor. Please, please, please find a trusted advisor. Vet them, ask questions about them, ask for references. Usually, most of my business come from referrals because finances are very personal. But if you are going out there, ask for referrals and talk to them as well too. And I think this is very, very important. Um, you don't want to put your money in the wrong hands of with someone as well too. You're divulging when you're actually having someone prepare your taxes. You have to give them your social security number. You have to give them your date of birth. You might even be giving them your bank account and routing number. So you're giving them a lot of personal information. So ask about them. Ask what they have done. Ask about what securities do they have in place to protect your data. That's the very most important thing. And I know you all maybe follow the news and things. So with security is really happening around here with data being, data being stolen and stuff as well too. So actually find a reputable person. Cheap is not always better. I would recommend if you have to pay the money to get someone who really knows. And then also find someone that's very proactive as well too, especially as you start to go, because this person is going to ideally be with you for a very long time, and as you grow, so make sure that that person has the capacity to grow and actually talks to you, maybe throughout the year. Just check in and see if anything has changed, and make sure you have dialogue with them as well too. I find a lot of breakdown happens is that everyone waits to the end of the year to have the dialogue to say like, oh, maybe I've had a kid or I've got married or I'm going to school and I have full tuition. People wait to the end of the year to have those conversations. So make sure at least if not every 6 months, you're just touching base with that person to say like, hey, this is what I have that's going on. I just want to let you know, this could this have an impact on my taxes? Yep. So those are the things I would just really recommend. Make this a proactive thing. One of the worst thing you could do is make this a reactive thing. And taxes over the years has been reactive, meaning that we get to the end of the year and everyone is in a hizzy, like, oh, I have to file my taxes. I have to file my taxes. But those things are happening throughout the year. So make sure you're just making it be proactive and in front of it, doing some planning and some thinking, some forecasting, talking with people, talking with advisors, talking with your parents as well too. This is one of the most important things. Your money is one of the most important things that you'll ever manage. One of them, yes, it's one of the most important things, and it impacts your whole life. So make sure you have a good people around you.
I think that's all of our questions. Thank you so much for coming and speaking. It was so interesting. I learned so much, and I'm sure all the participants did as well.
Yeah, absolutely. And if anybody have any follow-up question or is interested in more about accounting, please, you could share my contact with them as well to share my contact information. I would be happy to talk with them if there anyone that's interested in the field. I'm always happy to, give back and share my feedback on accounting.
All right, great. So we'll definitely do that if anybody has any questions. Thank you so much.
Thank you all. You all have a good one, okay? And enjoy the rest of the session.
You too.
All right, bye-bye.